Everyone, I'm Stephen Darby, an associate here at Ward & Berry, and today I'm going to provide a quick overview of insurance law in the context of business interruption with respect to COVID-19. And because it's largely governed at the state level, we're seeing a lot of differing law coming out of the courts in these cases. And insurance law is essentially just a specialized version of contract law. Without getting into the weeds, I'll leave it very simple. What your policy or your contract says is what will be covered and what will not be covered. And the courts will generally follow what the policy or contract says. But sometimes there can be ambiguity, whether it's the definition of certain words or a scenario where two clauses in the policy are conflicting. And this is why it's very important for you or counsel to carefully review your insurance policy. And as you or counsel review your insurance policy, you should really read it on a clause-by-clause basis, and pause and consider what scenarios may arise under each clause. And if you have an insurance broker, you should feel free to question them about certain areas of the policy. So as a business owner, or a property owner, or a car owner, your aim when you're purchasing insurance is to transfer your risk to the insurer. And your main goal when signing a policy is that you don't want scenarios to pop up where you are left holding all of that risk unexpectedly. And the key word there is unexpectedly. If you think of a situation where you think you can handle the risk of that scenario in exchange for lower premiums, you can make that trade-off, and then at least you'll know and you can plan for circumstances that may happen. So to illustrate the point in the context of these COVID-19 business interruption cases, there was actually a scenario where the insurers themselves were met with an unexpected risk, and that was the early to mid-2000s SARS epidemic. The insurers had not properly planned for the risks that they faced by the SARS epidemic, which are far less than the risks faced currently by the insurers in the COVID-19 pandemic. But unfortunately for policyholders, and in response to that risk, the insurers learned from the SARS epidemic, and they started inserting what are known as virus exclusion clauses, which means what it sounds like. These clauses preclude coverage for losses resulting from viruses. Now, before you close this video because you're running to check your insurance policy, or you think you're precluded from coverage because you know your policy has a virus exclusion clause, I'll say there have been cases in the courts where a policy had the clause and the policyholder beat the insurer on a motion to dismiss or a motion for summary judgment. And that's just to say this is still a hotly litigated issue. A virus exclusion is not dispositive of your claim. But it's certainly better to not have the virus exclusion than to have one. And the data from these cases, which is being collected by the University of Pennsylvania Carey School of Law, bears that out. As a breakdown of the numbers from those cases, around 13% of suits with policies that have a virus exclusion clause have resulted in favorable rulings for the policyholder, versus just over 30% of suits with policies that don't have the virus exclusion. A big difference, but not an insurmountable one if your policy has it. In cases that had a virus exclusion clause, something policyholders have used to survive a motion to dismiss or a motion for summary judgment was indeed other text in the policy which bound the insurer to cover. And that is exactly what a chain of restaurants did in federal court in an Ohio case against the big insurance company Zurich, which I will discuss in depth next Tuesday here on the Ward & Berry feed. You also feel free to connect with me on LinkedIn, where I post near daily about these cases and how important they are for businesses' profitability, risk management, and recovery of lost profits. So thank you all for tuning in, and I'll see you next Tuesday, where we will discuss that case in Ohio where the policyholder had a virus exclusion clause in its policy and still won its motion for summary judgment against Zurich. I'll see you then.